warahmatullahi wabarakatuh. Today we will be presenting about tax administration. But before we present, we need to introduce ourselves.
My name is Muhammad Syakir bin Yasin.
My name is Fateh bin Mohammad.
My name is Muhammad Faris bin Zulkhairi.
My name is Muhammad Hilmi bin Zamri.
I will present about the self-assessment system in Malaysia. As we know, Malaysia adopts the self-assessment system where the taxpayer is responsible for computing one chargeable income and tax payable, as well as making payments of any balance of tax due. The tax return is submitted no later than 30 April in the following calendar year. It is to encourage taxpayer to abide the taxation voluntarily to ensure efficient usage of tax administrator costs and resources, and to ensure consistent performance in all assessment branches, and lastly to improve and increase tax collection. So for the implementation, we will get the we need to obtaining appropriate knowledge, as the burden of accepting tax liability has shifted from the IRB to corporations. So next, for the tax audit and investigation to be a common and regular feature under self-assessment system, as important will be placed on post-assessment audit and examination. That tax audit and investigation can result in considerable compliance and cost burden. Lastly, keeping record practice. Under Section 82 of the ITA 1967, require a taxpayer to keep a sufficient records for at least 7 years from the end of the year. And the self-assessment procedure do not involve detailed checking of tax returns by IRB, but require an increased level of record keeping on the part of taxpayer for audit purpose. That's all.
Alright, now it's my turn to present, which is about the return and the assessment. First of all, we need to understand what is tax return and the assessment. Okay, tax return first is pay as you earn. Next is the amount of income tax will only be known when the taxpayer file in the tax return form. In addition is the submission of return year later basis, and lastly is the payment of income tax will be on the current year basis. That is tax return. Now, what about assessment? Well, assessment is notice writing issued by the tax authority to the chargeable person. The assessment will state the amount of the income tax paid. Okay, now we have explained about tax return and the assessment. We need to know there are 7 assessments, which is original, reduces, additional, composite, increased, advanced, and also protective. Okay, first of all, we go to the first one, which is original assessment. What is original assessment? Well, assessment made in accordance to the particular provided by the taxpayer or his agent in relevant return. However, the DG, which is Directorate General, also exercise his discretion. DG judgment may refuse to accept the return submitted according to the best of his judgment. Non-submission of returns is determined among the chargeable income and make assessment accordingly. That is income assessment. Next is reduces assessment, where there is an appeal or against an assessment or additional assessment. The taxpayers may reach an agreement with the Directorate General, which is short form for DG, during the review of assessment, or by providing acceptable evidences for claims of expenses, and win the case through appeals to SPCOM or court decision, resulting in the original assessment or additional assessment being reduced. As such, reduced assessment will be issued to reflect such income tax deduction. Okay. Now, next is additional assessment. Now, additional assessment may be raised by Directorate General in following circumstances. Additional assessment may be raised by DG in the taxpayer had omitted certain income while making the return, and it is discovered by the Directorate General after making the original assessment, and when tax had been refunded to the taxpayer by an error of effect or law. That is additional assessment. Now, moving on to the next assessment, which is composite assessment. There are 4. In this slide, there are only 2, but actually there are 4. So, makes default in furnishing a return in accordance with Section 77, subsection 1, or Section 77A, subsection 1. Fails to give a notice of chargeability in accordance with Section 77, subsection 3. Makes an incorrect return by omitting or understanding any income. And the 4th one is gives any incorrect information affecting to his own chargeability. The taxpayer reaches an agreement with the DG, Directorate General, during the review of assessment. Now, moving on to the next one, which is increased assessment. It is issued where the taxpayer reaches an agreement with the DG during the review of assessment. The court had decided the issues in dispute and result in an increase in the tax payable. Okay, next one is advanced assessment. The DG, Directorate General, is empowered to assess the taxpayer in advance by issuing advanced assessment or prevent loss of revenue to the government. Issued when taxpayer ceases to carry on a business where a taxpayer is about to leave Malaysia and his source of income is likely to cease upon leaving Malaysia. And lastly, we have protective assessment. Now, the DG, Directorate General, is authorized to issue additional assessment subject to a 5-year limit time unless there is element of negligence, willful default, or fraud. A protective assessment will be issued in a taxpayer is likely to incur a tax liability in the year assessment of 2013, but investigation has not been completed and will be issued before the 31st of December each year. That is all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. Okay, today I want to explain to you about penalty and offense. Okay, first of all, I want to give you a meaning of penalty and offense. Okay, this is taxpayer or duty and responsibility to the government in relation into the income tax. payable under the Act in order to deter taxpayer from non-compliance with such duty. The Act has legislated specific provision to impose fines, penalty, and imprisonment on defaulting taxpayer. Okay, after that, I will tell you about type of offence provision under ITA 1967 and amount of fine. Okay, the first type of offence is failure without a reasonable excuse to furnish an income tax return form. It is under 112 under section under sub 1. Okay, the amount is 200 to 2,000 or imprisonment or above. The second is failure without reasonable excuse to give notice of chargeability to tax. Is under 112 under sub 1. Okay, the amount is 200 to 1,000 or imprisonment or above. The third is make an income tax return by omitting or understanding any income tax. It is under 113 subsection 1A. The amount is 1,000 to 10,000 and is 200% of tax under charge. The fourth is give any incorrect information in matters affecting the tax liability of a taxpayer or any other person. Is under 113 under section 1B. Okay, the amount is 1,000 to 10,000 and 200% of tax under charge. The fifth is willfully and with intent to evade or assist any other person to evade tax. Is under 114 under sub 1. Is the amount is 1,000 to 200,000 or imprisonment or both and 300 of tax under charge. Okay. Next is assist or advise without reasonable care others to under declare their income. Is under 114 under sub 1A. Is 2,000 to 200,000 imprisonment or both. Next is attempt to leave the country without payment of tax. Is under 151. The amount is 200 to 2,000 or imprisonment or both. Okay, next is obstruct any authorized official of IRBM in carrying out his duties. Is under 116. The amount is 1,000 to 10,000 or imprisonment or both. Okay. The next is fails without reasonable excuse to comply with any other to keep proper records and documentation. Is under 119A. The amount is 300 to 10,000 or imprisonment or both. The next is fails without reasonable excuse to comply with a notice asking for certain information as required by IRBM. This is under 120 under sub 1. The amount is 200 to 2,000 or imprisonment or both. Okay. Last is fails without reasonable excuse to give notice on change of address within 3 months only. And the section is 120 under sub 1. Okay, the amount is 200 to 2000 or imprisonment or both. Okay, that's all for me about penalties and offense. Thank you.
Okay, Assalamualaikum. And now I will present about tax appeal. Tax appeal is the taxpayers allowed to file an income tax appeal if they are not satisfied with the income tax assessment, personal relief have not been appropriately given, forgotten to claim certain expense or relief or an arrangement during assessment issued by IRBM office. Okay. How to file an appeal? Taxpayer, if taxpayer receive a notice of assessment and disagree with it, they allowed to make an appeal. The appeal must be made within 30 days from the date of the notice they are received. Taxpayer have to write the appeal to the IRBM branch which issue the assessment. If taxpayer have valid reason to and require more than 30 days to file an appeal, taxpayer required to apply. The form is to be forwarded to for liquidation by the Special Commissioners of Income Tax. Okay, next is what is the required documentation. In order to make a proper income tax appeal, taxpayer must write a letter stating the type of mistake and clearly specify whether the mistake is either in expenses claim, the deduction, exemption or other things. To support the appeal, taxpayer must submit supporting documents such as expenses claim, deduction, relief and exactly. The supporting document are to be attached to the letter in the case where IRBM find out that the information is insufficient, IRBM may ask for the supporting document to enable amendment of assessment to be made. Please be reminded that taxpayers still have to pay tax liability even though an appeal has been made. Okay, then the last one is appeal statement. Okay, for appeal statement is an appeal may be settled either by agreement between the taxpayer and the IRBM or by a decision of the Special Commissioners of Income Tax or the High Court and the Court of Appeal. If taxpayers are not satisfied with the decision made by IRBM regarding the appeal, it will be forwarded to the Special Commissioner of Income Tax. In the case taxpayer still not satisfied with the Special Commissioners of Income Tax decision, taxpayer can appeal to further to the High Court or the Court of Appeal. And that is all from me. Thank you.